I work at Beacon Credit Union, in downtown Auburn, right along 7th Street, and this is Becca Moran, she's my boss, so, make me look good in front of her, guys. And we're gonna talk about the importance of building credit when you're young. Some people might think, oh, I don't need to worry about it until I'm an adult. Well, you guys are getting close to being adults. How many, like, 17 and 18-year-olds do we have in here? Okay. So yeah, a lot of you may be, you know, old enough to get credit started. Or if not, it's just a year or two down the road. So we're gonna talk to you about what is credit. So we're just gonna, we have candy for interaction. So we're gonna just do a lot of questions and there's no wrong answers. I mean, there are, but we're not gonna shun you or anything like that. So, who knows what credit is? Oh boy.
Wait.
I feel like your hand, I saw in my vision.
Credit is like a representation of how good you are at paying things back.
Oh, very
Great
good.
definition.
Anybody else have anything? Yes.
It basically is like, I don't really know how to explain it. It's kind of what she said, but it's like, it shows like if you're like trustworthy, like when you try and like go into a bank to get a loan, like they'll look at your credit, and if you have like a bad credit score, it like lowers your chance of them like giving you the loan.
Oh, I like that. She said the term credit score. Who knows what a credit score is? You.
It goes up on the more payments you make with your credit cards, and whenever the higher you get it, the more credible you seem.
Yes. Anybody else have anything to add to credit scores? Oh, I'm sorry.
Oh, that's good.
I do not have one.
They got a loan, how to pay all the payments on time.
It's gonna boost your credit score, is that what you said? Yes, absolutely. Anybody else?
So we've had a lot of answers on payment history. Making payments improves your credit. What other things would improve your credit?
Wait, I have a question. Doesn't it like help with like getting a house and like all that other stuff?
Yes, because you can't get a mortgage without having your credit report pulled.
Other things that can help build it is like when you have a credit card, like not maxing it out, like using like there's like some percent, but I can't remember what it is.
Yeah.
But, like only using that minimum percent.
Yeah,
Does-
that's a really good answer.
Does anybody know the percentage, the utilization percentage
40%.
target?
Isn't it?
Right?
Is it 20?
30% in between. Yep. 30% or below. So if your credit limit is $1,000, you'd want to try and keep your monthly usage below $300 to stay below your 30% utilization. That tells the credit bureau that you're using your credit lines, but you're using them responsibly.
Oh no, I gotta go back. I'm showing the answers. I did this like I was gonna cover it. What are the three, credit agencies, guys?
It's an easy one.
Equifax.
Okay, who said that?
And
Experience.
Ooh.
TransUnion.
Woo!
Yes,
Yes!
I mean, they are here. Really using your resources very well.
Oh, thank you. I don't know who else. I'm breaking things over here.
On the other side.
Here we go. We got lots of fan stuff. Okay, now, when you apply for credit, who knows, do lenders, like, so if you came into Beacon Credit Union, and it's like, Dawn, I need a car, I want you to run my credit and see if I can get approved. Do you think I pulled all three credit bureaus?
Yeah.
Why not? Do you know why?
Because they're all different.
So when you just use one.
Right, and someone over here said, they're all different, they all do take, different,
Credit factors.
yeah, factors to get their score, so, the only loan that takes all three is mortgages, so they'll take that there. Moving on, oh, yeah, there we go. Okay, has anyone ever seen a credit report? You've seen a real life credit report?
Yeah, Yeah, they showed us one last week.
They got,
Well,
got
that means
us.
they should know all the answers.
Oh, yes,
They're good.
so that's our next question. 10 items that appear. Let's raise our hands and see if you guys can remember what's all on there. Yes, sir. Not necessarily, but your work history, employment is on there, right? Yes, correct. Yes, sir.
Your name.
Your name.
Your name, yeah.
And Eddie, can you, go even further on names?
Your birthday.
Social security.
That, but like with names, so I am married, so I got my first credit card when I was not married.
Your
So
maiden
if you
name.
look at my credit, report right now, you're gonna see all the variations of whenever I applied for a card, or a loan, so it could say Dawn Ayler, which was my, maiden name, and then when you see my most recent mortgage, inquiry, it's Dawn M. Pruitt. If I spelled my name wrong on an application, that's gonna show up. However you've applied for credit, it's gonna show up on your credit report. Something else that's on your credit report. I'm trying-
over here. She's been waiting.
Yes.
Is it just your current address? No, what else does it have? Any previous addresses you lived at, right?
Now, let's say you were, living on a friend's couch for 6 months, will that show up on here?
No.
It's only if you receive mail and you've changed your, mailing address to that. What else, guys? You're doing good. I'm trying to get you, I don't think you've said anything yet. Yes, closed accounts. Yeah, I was looking right at you.
Your birthday.
Your birthday is on there, yeah.
Oh.
House, what do you mean by house?
Your house and your
Your bond.
Like your mortgage? So, yeah, that will show. Oh, gosh, I'm so sorry. I am not doing good on this side of the room. I'm just gonna,
You better pick on her now. You know,
all right,
say it.
yeah.
What you got in the back? Yeah, so your credit report won't show you, let's say I go to Target and I buy Cheez-Its and, I don't know, a Ninja Creamy, okay? It's not gonna show the items that I purchased, but it'll show that I spent a total dollar amount at Target, if I use my Target credit card.
Yes, and it shows, so there's different kind of credit, so there's revolving credit. Who can tell me what revolving credit includes?
Yeah, I know this one, but I can't remember.
So it's credit that keeps going and going. As you use it, you pay it, you use it, you pay it.
Like a credit card.
Like a credit card, a line of credit, home equity line of credit would be one.
Right.
And then there's installment loans. So installment loans would be, you made a purchase for a set dollar amount for a set amount of time, which means you have a set payment, right? So those are installment loans. There's an end date to that type of, credit line.
And do you guys have a example of what an installment loan might include? Think about something every day, yes. If you need to buy like a new refrigerator and you get, yeah, that could be an installment. What else? Car payment, yes.
This is more of a question, but
Sure.
it's like kind of an answer. So like when you have that, like when you have like a big amount of money, like you like make like take out a bunch of money and you have this big payment, is that like where you like pay a certain dollar amount like each month and you have to pay it by a certain amount of time?
Yep,
That's
that
the
would be an
installment.
installment loan.
Absolutely.
Yep, so if I have a $10,000 car loan and my payment's $200 a month, and my due date's the first of the month, I have to make sure I pay that $200 by the first of the month, every month. And in 3 years or 4 years when my car loan is paid off, I'll be good.
Taxes.
taxes.
Can you go into detail about taxes? Like, what do you mean by that?
Insurance.
Yes and no.
Yes and no.
Like, if you have a tax lien on your house, that will show up on
So
your
if you
credit.
haven't paid your property taxes, yes, that would show up in your credit report.
You said taxes, and that's in one of the answers, so you get some candy. And we gotta get rid of this big bag, so. Oh, yes, something else that shows on your credit report is if you've paid anything late. So it will say if you are 30 days late, if you've ever been 60 days late, if you've ever, been 90 days late, or if it's gone into collection, all of that will show on your credit report. So what I always tell people when I'm asking, you know, they wanna get a loan, one of the first questions I ask is, do you currently have any collections out or unpaid debts? Because some lenders will not, lend to you until those have been paid off. So I like to lead with that. But if they say, oh no, I should be fine, it's always gonna show up on your credit report. So you can't hide from anything that's on your credit report. Yes, do you have a question?
What would happen if you were just like 1 or 2 days late at one time? Would it really hurt you or?
It's usually 30 days once it gets reported. But if you're a day late, there are some companies, like credit card companies, that will tack on a late fee for you. So it's still, it's not hurting your credit, but you're gonna be paying $25, $30 late fee. Even if you're like, well, it was due on a Sunday and you know, you don't take payments on Sunday. They don't care. They're like, well, you should have paid it on Friday or whatever. So, yes, ma'am.
So last week we learned about like bankruptcy, so like when you file bankruptcy, would that be on like the report?
Yes, yes, it would. Oh, and I forgot to give you something. Oh, there you go. Anybody else? So credit inquiries. Do you guys know what inquiries are based off pulling or actually getting a loan?
I
What's
heard
the
about
difference?
it, I don't know.
Yes, ma'am.
It will really depend on your credit score. If you have a high credit score, you'll have more credit reporting.
So the higher amount of inquiries that you have, the more it affects your credit score. Yep, so if you have a lot of inquiries, like I just bought a new car recently, and if I go to Beacon Credit Union for my auto loan application, they're only going to pull my credit one time for an auto loan from TransUnion, that credit bureau. If I were to go to the dealership, there's a chance that they could pull my credit 5 or 6 times because they're sharing my information with a bunch of different banks to try and get me a better rate. So that would add up on my inquiries. So if I had 5 or 6 inquiries that stay on there for the next 2 years, even if I didn't get a car loan through the dealership, it can affect my credit score.
Can you, I heard one of them, I think Wyatt back here said something about when they do a hard pull on your credit score. Can you explain like the difference between when it's gonna be like a hard one and it's gonna impact your credit more versus the ones that don't impact it as much?
Yeah, so anymore, there are, so employers can check your credit, cell phone companies, some insurance companies will check your credit score as well. Those would be considered soft pulls. They're kind of just saying, let's take a look at your credit score, let's look at limited information, give me an idea of where you're at with credit worthiness before we move ahead. A hard pull would be something which would be like a 3 credit bureau pull. So all 3 credit bureaus would be pulled for a mortgage application. So you wanna buy a house that's, you know, $300,000, that's a lot of money. So they're gonna wanna look at all 3 of your credit bureaus and make sure that they're getting a really good picture of what your credit worthiness looks like for what they're lending you. That's a good question. So Don touched on collections. If you have accounts in collections, there are a lot of lenders that would want you to pay that off first before they would give you any more, because when it goes to collections, your lender has you've already been 30 days late, 60 days late, 90 days late. Oftentimes they've sent you demand letters to try and pay this debt. One thing I would always recommend is if you find yourself in that situation for any reason, communicate with that creditor, right? Call them and say, hey, I can't pay you Friday, but I can pay you Monday, right? Can you give me a lower interest rate for a short period of time? Help me get caught up, right? Stay in communication with them. Don't ghost them. Cause if you ghost them, they will sell your debt to a collections company, and then they'll have that collections company assume the responsibility of getting payment from you. And that hurts you a lot more when it gets to us, because that tells us you've had your 30, 60, 90 day, all of these warnings from that creditor goes to a collections company, so it tells us that you just have an assumed repayment of that debt. So it's something you definitely wanna get taken care of soon.
And I would say 90% of, lenders are gonna want to work with you. They don't want to ruin your credit. They wanna help you as much as you can, and if you're being proactive and honest upfront versus after the fact, then they're gonna work with you. And then you kinda touched on the taxes and the tax liens and bankruptcies, those do show up on your credit report too. Now, the importance of building credit when you're young. Obviously, we talked about getting loans, things like that, but we kinda touched on, it can affect if you get a certain job that you applied for. For us, we work with money. Obviously, Beacon's gonna wanna, hire people that can, you know, if you can handle your own finances and background, then you're more willing to get a job where we're dealing with other people's money. So, it can affect where you get hired, and then different rates, that you get charged. If you have a lower, credit score, you're usually gonna get a higher interest rate, which is the fee that you get charged when you get a loan. Do you guys all know how interest rates work?
Yeah.
Let's say, did you go over that with, yeah, so, if you have a higher score, you're gonna get a lower rate, pay less, fees over time versus, the higher rate.
I have a question.
Yeah.
So last week they talked about how they've had like a lot of like super like rich people that like come in and try to get loans, and they have to like turn them down because like they have a bad credit score, but like they know that they have money. Like I just was curious like how that works.
No credit is considered bad credit. So if you've always paid cash for something, that's why it's always important. I tell people, even if you don't like to have credit, like it just scares you to have it, always have at least one credit card where, I budget for gas every month. Like I know I'm gonna budget $200 a month for gas. So I always put my gas each month on a credit card, and I pay that off. And that keeps my credit building and active, and so that I have a good score, but it's not this huge purchase. So it's always good to have something small that you know you can responsibly pay off every single month. Yes.
I just want this question, I remember. So like, say I had a credit card set aside and I wasn't using it or saved it for like a special occasion, would I still be paying interest on that card?
If you do not have a balance on there, then no, you don't pay any interest.
Okay.
You only pay interest on whatever your balance is. Yep. Good question. That deserves.
Is there like a max amount of like credit cards that you can have like in a?
Everybody's so curious about that one.
Yeah,
That
we
makes me
had that in
nervous.
every class so far.
So, okay, so you can look at it you can look at it a couple different ways. So, you're probably gonna be shocked by this, but I shared this in an earlier class. I have about 18 to 20 trade lines on my credit report. So I have a significant amount of open accounts. The majority of them are zero balance and paid, but they're open, right? And then when I use them, I pay them off. Generally around 15 is where like Credit Karma would say is like a good or healthy amount of trade lines. However, disclaimer, you know yourself best, right? If you struggle to pay back the debt, if you struggle with overspending, having 15 trade lines is probably going to get you in trouble, versus maybe for you, it makes more sense to have 5 and then build up other factors of the credit score. You know, make sure you're always paid on time and everything. Maybe the majority of your score doesn't come from your number of trade lines, but from your other factors that you're paying attention to. There are people that probably should only have one credit line if it's hard for them to manage that. So It's a tricky question. You can have more. It doesn't mean that it hurts you or helps you necessarily, but it's the other factors, it's how you use it that really is a bigger factor.
Yes.
I'll also note too, she mentioned that, Lake City talked about customers that have a lot of money, but maybe don't have great credit. We see that sometimes too. Your credit score does not depend on how much money you earn, right? One of the things that we look at when we approve a loan would be what's called debt to income. So how much you earn versus how much you owe. We're gonna be at 53% or less. If you owe on a monthly basis more than half of what you earn, we're not going to give you any more because that doesn't account for groceries and utility bills and gas and all these other things that you have to pay, dental visits and doctor's visits and all these other things that you have to pay for, right? So we don't wanna lend you 75% of what you earn in a month, cause then you won't be able to pay for everyday living expenses, right? So we would wanna make sure it's below that. But something we do see is sometimes there are people that earn quite a bit of money, but their debt to income is maxed out, right? They have boats, they have motorcycles, they have trucks, they have a rental home on the lake, right? So they may spend as much as they earn to the same amount that somebody that earns less would.
Exactly.
So when you talked about, like, you cut like $200 like towards your gas and like you pay that like every month. So when they look at like your credit score, do they look at like what you're spending that money on to get your credit score, or do they just like look at the score?
They look at the they don't look that and like, oh, she's paying gas every month.
And like
That's
that's
not
just
worth
like
it.
it's like
They
all
just-
she's doing is just to like
Nope. As long as it's just showing that I'm using my credit card and paying it off, that's what they care about. Yep. You had your hand up for a while.
If you use a rental, you just sign your credit card and you pay all of it back at one time, but that helps your credit.
Yes, you always, if you can, especially on credit cards, if you can pay off that full balance, that's the best thing you can do. Yes, sir.
So is all your credit lines connected to one credit card, or do you like get multiple?
You have multiple.
Yeah.
Yep. And also to your question as well, if you have, let's say you have $1,000 in your savings account that you just have saved up for emergencies, it's okay to use credit cards as a tool, right? Maybe you don't, maybe you have $1,000 balance on your credit card, but to wipe out your savings may not be the best idea to pay that off, right? Maybe it is better for you in that time to make payments on that credit card balance so that you don't, put yourself in a position where you don't have that emergency fund, cause then you probably just use the credit card to do that, so, yeah.
And then, so how to build credit at a young age? Who knows what a secured card is? I think someone mentioned it earlier.
I know what it is, but I don't remember like.
Did you raise your hand back there? Yes, what is a secured card?
The debit card?
No. Close. Yes.
Your credit card is a credit card you can't, go over the limit.
You can't go on the limit, but do you know how it's funded? It's funded and
Checking.
you use your own funds. Yes, you use your own funds. So let's say you get $300 for a gift and you're like, I wanna start building my credit. I'm too young to get a regular credit card on my own. I'm gonna use this 300 to get a secured credit card. So using the 300, that's gonna be your limit on that credit card. But to make it build your credit, you wanna use it and then pay it off. Use it, pay it off. And you'll wanna do that 6 to 12 months to really build your score. And then at that time, you can try to apply for an unsecured credit card. So like your store cards or your just regular Visa card. And then once you wanna close that out with a zero balance, you get that $300 back that you invested. Now, if you say, I'm gonna close it out and I'm not gonna pay my bill, they're gonna keep that $300 that you gave them to open. So the credit company doesn't have as much risk in losing anything on it because you paid it. So that's a really good way to get started at a young age. Some FIs have starter loans. You could ask to be an authorized signer or joint owner with a loved one. That can be risky because they are putting their name and good credit out for you. Or if they're not so responsible, they could ruin your credit. So you've gotta be very careful and make sure you're really trusting of the person that you ask of that. Paying your bills on time, someone said that earlier. If you don't pay things on time, that's gonna get reported. there's this feature at Experian Boost where, does anybody, have their own like Spotify or Netflix or Hulu? You can add that by going to this link, even though it's not a credit, it's a bill that you pay regularly, and it can go to building your score, as a young kid. And it doesn't hurt your credit score at any, reasons, and it's free to use. Yes?
Is there a way to check your credit score without?
Yes, we will be getting to that.
I heard somewhere that like checking your credit score like is bad, like it like makes it go down or something.
If you run your credit or have too many inquiries, that is what makes your credit score go down. Go ahead.
You can use, how many of you guys know Credit Karma, or heard of Credit Karma, right? So I use Credit Karma. I also use Credit Sense, which is a tool that we have on our website. And Credit Sense and Credit Karma are credit score predictor apps, right? So they're not giving you a true poll every single time, so you have to keep that in mind. But it gives you an idea of what your score would be from these credit bureaus based on your activity. And it tells you if you missed a payment, what credit lines you have out there, and an approximate score. So it's a really, really good tool. Something that Credit Sense has that, this is why I use Credit Sense in addition to Credit Karma, is that it has a simulator feature. So if I'm like, I need a new car, what would applying for a car loan do to my credit score? And I can plug that in, it shows me what it would do, and I can decide whether or not I wanna do that or not. So if I increase my credit card balance, if I do a bunch of different things, it'll show you what it'll do to your score. So it's pretty cool.
Yeah.
There's also a bunch of other tools on our website. You do not have to be a Beacon member to use these tools. So you can go out there at any time. There's calculators, there's budgeting tools.
Yeah.
You wanna learn more about credit, all kinds of stuff on there. So feel free to go out there and look at those things too.
Yeah, so we said earlier, a credit score can range from 300 to 850. Obviously, the higher the score, the better credit you have. And this is kind of, a good illustration of anything 720 or above is considered excellent.
Now, if you're just starting out, so if you came into Beacon and applied for an auto loan and you don't have any credit history, it will usually either show us a 0 or N/A, meaning not applicable, meaning there's no history for you out there. So it's not necessarily a bad thing, but it doesn't give us much information to go off of.
This answers your question on where you can go to get a free, annual credit report. This is something that's good to check for fraud too. Like I told the last class, in the last couple of years, there's been an increase in fraud with, the bad guys stealing minors' social security numbers and opening lines of credit under them. So it's always smart to, check that, and you can do it for free once a year by going to that. Yep.
What's like, so you said like where you wanna be, but like what's for your credit score, what's the lowest point you should, I guess avoid, but like what's the lowest point you would ever?
So, like for our lending guidelines, I would say we're a little conservative, right? So we're gonna want credit scores that are just a little bit higher maybe than some other places. But we also don't charge as high of interest rates because we're lower risk, so we try to keep our rates low. Places that will lend to people with lower credit scores usually will have higher interest rates because it's higher risk, right? So I would say like our D tier would be 640.
Yeah.
So if your score's lower than 640, there's usually something out there, a missed payment, a collections, or something out there. The lowest I've seen is 504, and I've seen into 830.
Yeah.
So it just depends.
So when you like pay off your credit card, like the bigger purchases that you make like with it, does that like make your credit score go higher, or is it just like?
It can. So I'll give an example. I like to travel. So I got a travel credit card, so I get rewards towards travel when I use it for travel purchases. So I went on a bigger trip last year and knew that I was gonna spend that money, so I had saved it in my savings account. But I purchased everything on my credit card, but I was able to pay it off still the same month because I had saved it ahead of time. But because of that, I got more rewards, and it also showed the credit bureau that I can make a big purchase like that and pay it off, at least in that circumstance.
Yes.
So,
I have a question about, so I went to the doctor's office and then, a month later, something, I don't know when it was due. I don't pay for my bills because I don't have a job, my parents do.
Mhm.
So apparently, they sent me like a bill on, like, in my email, and I don't look at my email that much. So I got a black mark because of that. But then my parents paid for it. Like, it was overdue because they didn't know. They didn't get a mail.
A notification,
Yeah.
or a bill in the mail, yeah, and that can happen, and, something that we saw a lot, health payments can get a little more complicated, cause sometimes it gets sent to the person who's owning the insurance plan, sometimes it gets sent to the individual depending on how old they are. And that changes, so I think it's like 16, I
Yeah.
think you would get your information where it used to be 18, when your parents would get it until you're 18. Medical collections have since been removed from credit reports, which was a huge success for us because medical care is expensive, right? And it's hard to pay it back, and unfortunately, they don't give you very long to pay it back. And so, you could have a health event happen, and we saw that a lot, where, you had an emergency room visit, and they're making payments on it, and they got sent to collections anyway, and then that was a debt they'd have to pay before we could lend to them. They've since been removed from credit reports, so that was a really, really good change.
So when you talked about the thing where you can like have like your like Netflix bills, like what you're paying monthly, like added to your credit, do you have to be 18 to do that?